Fox Business Alert, a software kingmaker embraces an AI lord. Private credit and equity giant Thoma Bravo has just struck a partnership with Alphabet's Google Cloud to help give its 80-plus portfolio companies, many of them in software, access to Google's Gemini AI platform and its AI enterprise tools. The $2+ billion 5-year-long arrangement will embed Google engineers at Thoma Bravo's portfolio firms to troubleshoot, help speed up product updates, and co-sell and access new routes to market through Google Cloud Marketplace. In a Fox Business exclusive, I just spoke with Thoma Bravo's founder and managing partner Orlando Bravo at the Semaphore Conference in D.C. about what drove him to the Google deal and how the AI tide is tossing and turning the software sector.
We are so excited about that partnership. You know the main driver? Things are moving so fast, and we need to be moving very fast. We own in our funds the #1 domain leaders in so many areas in the enterprise. Payroll, planning, procurement, pretty much all of cybersecurity. And the opportunity that those software companies have to expand their markets through AI is unbelievable. It's about a 10x opportunity than their current market today. And who better to do it with than this broad infrastructure provider where we can leverage their models, how to build agents, we can leverage Google Cloud, and basically their entire infrastructure of AI.
So your companies that you have, your software companies, will have access to Google Cloud, Google engineers, all of that. Sounds like Google's doing a lot of the heavy lifting. What do they get out of the Orlando Bravo, Thoma Bravo situation here?
Well, first they get money, because they do, we do have to buy those great services from them, period, and leverage it. Okay, now, the big thing that they're excited about is, remember, these domain experts in software that are running the business of their customers at a detailed level, running payroll, running procurement, running planning, running different functions, they're the ones that hold the key to AI implementation with their customers. So when we go in and deliver agentic solutions to those customers, we will be bringing in Google and Google services with it.
You know, some people will say that this is an acknowledgement on behalf of Thoma Bravo that they were falling behind when it came to AI and implementing it across all of these different companies that you have. What do you say to that?
You got to move with your customer. See, you cannot be way, way, way ahead of your customer, so you don't deliver garbage AI to your customer. We have pretty much all the Fortune 1000 as customers. They depend on our company's services. They depend on services to be right. They depend on good implementation. They depend on getting return on investment from these software companies, that products that they're buying. If you're way, way, way too early and start experimenting, you begin to lose the trust of your customer and the value that you're providing. So you just have to be fast, but you have to be realistic about what your customer can absorb and what's right for them.
And you turn to Google because they are so far ahead when it comes to Gemini and AI.
I believe they are.
Okay. Let's talk a little bit about private credit, because on your website you have Thoma Bravo Credit. And in it you say, it focuses on market-leading software companies with predictable recurring revenues, high-quality borrowers with resilient cash flows, conservative capital structures. But even the biggest publicly traded software names, ServiceNow, MongoDB, Snowflake, have run into trouble. They've been hit by the wrecking ball, even though they check a lot of those boxes. Where do you stand with all of your companies on your platform right now? Are some of them showing signs of distress? Any of them?
We have made mistakes. We have a company that's not doing great right now.
Medallia.
Correct, out of 77. And that is our mistake. That wasn't due to AI. That wasn't due to something that happened to us. We overestimated growth rates, and in doing so, we paid too much. Now, if you put that aside and you look at our most recent investments, you take the last 20 of them, our companies today are absolutely crushing it. If you look at AI alone in those companies, bookings from AI are about 35% of all the new business those companies are generating, and they're just doing wonderfully well.
But has the private credit shake that has happened, where the major jitters, they are swamped. A lot has changed since January. A lot has changed in that the redemption requests have been huge for everyone from Ares to Blue Owl to Blackstone. Has it changed the way you look at future acquisitions?
It's made us double down on our strategy. It has made us a lot more disciplined of what we've been doing for 25 years. And those are three things. Number one, by the deepest domain leader and the number one player in each of those areas, highest quality. Second, back existing management, the domain experts that are running those companies day to day that really know that domain. That's what's special about these businesses. And third, by companies that get it, that understand this great platform transition and the new opportunity that AI is presenting to them and are showing track record towards it. Now, private credit in software, if you look at it, it's tough right now because software, it's not like every software company is going to be good. AI will disrupt many software companies, but those that will get disrupted, we're going to be disrupted anyway. It'll just happen super fast. And some of them are sitting in private credit books.
Well, I think the hit to private credit, or at least the reputation, which, by the way, J.P. Morgan has said is not entirely based in reality, because the business models of many of these are long-term loans, and they're pretty strong depending on the company. But what also happened very fast was Anthropic coming through with Claude Cowork, and that, of course, got everybody nervous that many AI software companies were going to be disrupted by something like Claude Cowork. Then, and you deal in dozens of cybersecurity companies that are under your wing, came Mythos. How are you absorbing the shock, the aftershock of Mythos, which got a lot of cybersecurity stocks hammered because they were worried this thing is so good, it was able to spot thousands of vulnerabilities in a second?
We used to own a company many years ago that checked for vulnerabilities in code at the time code was written. At that time, that was innovative. Now these great models can scan through that and find even more vulnerabilities. For that particular company that we sold a long time ago, yeah, this would be a big threat from what these model providers are doing.
What are you most excited about that you would love future investors to think about when they think of Thoma Bravo?
We are in the best place that we could ever be. It reminds me of what we were in 2000.
Oh, wait, you're saying that, and yet you are among the most heavily exposed to software, which is in question right now.
But that's the thing. It's better when times are difficult. We always do a lot better in down markets than in up markets. We do a lot better when it's hard to get financing and we have to go to 133 lenders and actually do the work. Our people at our company have their feet on the ground and they're looking at the specifics of each customer, of each industry, and we're doing the detailed work, and that's really going to pay off.
Orlando Bravo.